Okay, real talk for a sec. Inflation, it's everywhere, right? Like every time you hear the word, you just want to like, I don't know, crawl back under the covers and pretend it's not happening. It
Yeah.
can feel pretty overwhelming.
Oh, absolutely.
Prices are crazy high.
Yeah.
Well, today we're going to tackle this head on using this source we have called Inflation Explained and How to Protect Yourself. We're going to try to get to the bottom of this whole thing. We're going to break it down, make it simple so you actually understand what's going on, and more importantly, what you can do about it.
Right. And one of the most interesting things that this piece really does is challenge the typical definition of inflation.
Okay, interesting. How so?
We tend to focus so much on rising prices,
Right.
but that's just the surface.
Okay, you intrigue me with the surface talk.
Yeah.
What's lurking beneath the surface?
Well, what the article highlights is the real issue is the expansion of the money supply.
Okay.
When you only focus on price increases, you're kind of missing the larger, more systemic problem.
Okay. So how much is this money printing, as some people call it, actually happening? Can you give me some concrete numbers to really illustrate this?
Yeah, absolutely. The article lays out some pretty staggering stats, actually.
Okay.
The U.S. money supply, which is also known as M2, increased by, get this, 40% between 2020 and 2024.
Wow.
And globally, M2 is up 31.5%. So it's
Yeah.
a huge jump in the money supply.
Okay, so basically more money in circulation, but the same amount of stuff to buy.
Right.
So each dollar is worth less, which explains why we're seeing these crazy price increases. Am I on the right track?
Yeah, exactly.
Yeah.
It's really basic supply and demand. And, we're not just talking about some theoretical economics concept here.
Sure, yeah.
This directly impacts you and your purchasing power. That $20 bill in your wallet.
Yeah.
It just doesn't stretch as far as it used to.
Yeah, this article isn't sugarcoating it. Eggs are up, it says 71%, milk up 15%, and the median home price is up over 52%. Those numbers are, honestly, they're kind of scary.
Yeah,
You
it's a harsh reality. And it's not like these are isolated incidents. This is a systemic issue impacting everything. You see it in the price of groceries, gas,
Yeah.
Everything. Even if you're thinking about buying a new house, you're seeing this.
So will prices ever go back down?
Yeah.
Like, is there any hope of returning to quote-unquote normal?
Well, the article actually makes a pretty bold
Okay.
and maybe a little unsettling prediction,
Okay.
and that is prices are likely to keep rising.
Hold on. Are you serious? Like, this sounds like a nightmare I can't wake up from.
I know it's not, not what anyone wants to hear,
Yeah.
but there's some economic reasoning behind this projection.
Right.
Projections show that there will likely be continued increases in national debt, deficit spending.
Mm-hmm.
More debt equals basically more money being pumped into the system,
Yeah.
which, just further fuels inflation.
Right.
So
It feels like a vicious cycle with no easy way out.
it does. And it's not just a U.S. issue.
Right.
The article points out that the U.S. dollar as a global reserve currency kind of amplifies inflation worldwide.
Right.
So even if things were to improve domestically,
Yeah.
global trends could still drive up prices here.
Wow. So this isn't just about, like, our everyday expenses. This is impacting our investments, too.
Absolutely.
Okay.
We often overlook how inflation is quietly just eroding our investments.
Right.
And so if your investments aren't outpacing inflation,
Mm-hmm.
you're actually losing purchasing power over time.
Okay. But wait, I thought investments were, like, the key to building wealth, right?
Yeah?
And having a secure future.
Yeah.
What about the traditional advice we always hear of index funds and 401ks?
That's, the classic approach.
Yeah.
But here's the catch. If your investments aren't growing faster than inflation, you're not really making progress.
Okay. Yeah, that makes sense. But even with some of the recent stock market gains, are we really winning if inflation is just eating away at those returns? The article mentions, for instance, gold being up 71%, crude oil up 23%, the S&P 500 up 79%, and the NASDAQ a whopping 112%.
Right. And that's where it gets interesting. Those numbers, they look impressive on the surface.
Yeah.
But when you factor in inflation, the real returns might not be as great as they seem.
All right. I'm officially starting to panic if prices just keep rising. and my trusty investment strategies aren't going to cut it. What am I supposed to do? Is there any escape from this inflation maze?
Don't panic just yet.
Yeah.
While things might seem a little bleak, the article does offer some hope. It's about changing our mindset a little bit and taking a proactive approach to protecting and growing our wealth.
Mm.
in this new economic landscape we find ourselves in.
Okay, I like the sound of that proactive approach. What does that actually look like? Give me something concrete I can work with.
Well, the key is to look for, uh, seek out assets that have the potential to actually outpace inflation. Just passively investing.
Right.
That's not really enough anymore.
Yeah.
We have to be much more strategic and informed in our choices.
So instead of just throwing money at, the general stock market and hoping for the best, I need to be more selective about what I'm investing in. What kind of assets are we talking about? Can you give me some examples?
Yeah, the article specifically mentions real estate, commodities, and high-performing equities.
Okay. Let's break those down one by one, starting with real estate. I like that it's tangible, something you can see and touch, which feels reassuring right now. But haven't home prices already gone through the roof?
You're right. Real estate has seen some pretty significant appreciation. But that's actually, in a way, that's why it's worth considering. Historically, real estate tends to hold its value during inflationary periods.
Okay.
And often, rents will often rise along with inflation, which provides a steady income stream.
So investing in, say, rental properties could be a way to generate passive income that keeps pace with these rising prices.
Exactly. And, even if you're not in a position to buy a rental property outright, there are other ways to gain exposure to real estate, like through REITs.
REITs. Okay, tell me more about those. What are the pros and cons of those versus, say, buying a rental property?
Yeah, so REITs are they're basically companies that own, operate, or finance income-generating real estate.
Yeah.
You can invest in them just like stocks,
Okay.
which gives you access to the real estate market without having to actually go out and buy and manage properties yourself directly. They can be a good option for diversifying your portfolio. But keep in mind that they can also be affected by interest rate changes and overall market volatility.
Interesting. Okay, so that's REITs. What about commodities? That one feels a little more, I don't know, intimidating to me.
Yeah, commodities can seem a little complex.
Right.
But basically, they represent raw materials or agricultural products. Think oil, gold, silver, wheat, corn, even coffee.
Right, like the essential stuff that goes into making everything we use and consume every single day. Okay, but how do those protect against inflation?
Well, when a value of currency declines due to inflation, commodity prices tend to rise. They kind of act as a tangible store of value, a hedge against that declining purchasing power.
Okay. So if I buy a gold bar today, in theory, its value should increase as inflation pushes up the price of everything else.
Yeah, that's the general idea.
Oh.
Of course, any investment has risks, and commodities are no exception. Prices can fluctuate based on, global supply and demand. But diversifying your portfolio with some assets like commodities can help, mitigate the impact of inflation.
Okay, that makes sense. And finally, let's talk about high-performing equities. This sounds like it requires a lot more active involvement than, say, just, parking your money in an index fund and forgetting about it.
You're right. Investing in individual stocks definitely requires a lot more, research and due diligence. But the potential rewards can be significant, especially in a time of high inflation.
So instead of betting on the overall market, you're talking about finding specific companies that you think are poised for growth, even when the economy is kind of, struggling.
Exactly. Look for companies with strong fundamentals, solid management teams, innovative products or services that are in high demand, even when prices are rising.
So it sounds like we're moving from a passive investment approach to a more active strategic one. It's almost like we have to become like our own little personal hedge fund managers.
You could say that.
Yeah.
It's really about, taking ownership of your financial future and making informed decisions that align with your goals and your risk tolerance.
Right. But let's be realistic. Not everyone has the time or the expertise to become a, stock picking guru. What advice would you give to someone who's maybe feeling a little overwhelmed by all of this?
Yeah, that's a valid point. And it's important to remember you don't have to do this alone. There are resources available to help you, navigate these complexities. You could consult with financial advisors who, specialize in inflation hedging strategies. You can explore educational materials that break down these concepts in an easy to understand way.
Yeah.
There are options out there.
Okay, that's reassuring. So it's not about becoming an expert overnight. It's just about taking those first steps toward, becoming more informed and proactive with your money.
Exactly. The more you learn, the more empowered you'll be to make decisions that protect and grow your wealth, even when we're facing challenging economic times.
This deep dive has been really eye-opening, honestly. We went from feeling like really anxious about inflation to actually understanding it,
Yeah.
and even exploring, some ways that we can get ahead of it. The article really emphasizes, moving away from that passive approach with our finances and really becoming more active and taking control.
It's not enough to just save and hope for the best anymore. We we need to be more strategic and informed about where we're putting our money.
So instead of like blindly following outdated advice or following the crowd, we need to become like our own financial advocate.
Precisely.
Yeah.
It's about owning your financial future and making choices that are aligned with your goals, your risk tolerance, whether that's, exploring alternative investments like we talked about, real estate or commodities, or even, diving into high-performing equities.
Mm.
The first step is really just educating yourself
Mhm.
and maybe, seeking guidance from some trusted experts.
Yeah. And remember, you don't have to become an expert overnight. It's just about, taking those initial steps towards greater financial literacy and gradually adjusting your strategy over time.
Every journey starts with a single step.
Yeah.
And the journey toward, financial security in an inflationary world is no different.
So as we wrap up this deep dive here, I want to leave you with this. If you could take just one action today to better protect your financial future based on, what we've discussed today, what would it be? Would you, research a new investment strategy?
Hmm.
Would you consult with a financial advisor?
Hmm.
Or maybe just even have a conversation with your family about, your financial goals and concerns?
Yeah.
The answer is entirely up to you, but the important thing is to start taking action. Don't let inflation just paralyze you.
Mhm.
Empower yourself with knowledge and take control of your financial destiny.
And remember, even in a world of, economic uncertainty, informed and proactive individuals, they can not only survive, but thrive.
That's a great way to put it.
Yeah.
Thanks for joining us on this deep dive into inflation. Until next time, stay curious, stay informed, and stay empowered.
Yeah, that's the big question, isn't it? Can we really change the course of inflation, or are we just, kind of stuck riding this wave and hoping for the best?
It's a question I think a lot of economists and policymakers are really grappling with right now,
Yeah.
and there isn't an easy answer.
Right. Some people argue that this path we're on, with all this debt and spending, it's unsustainable,
Mm-hmm.
and that a major, economic shift is kind of inevitable at some point.
Yeah.
Others believe, maybe we can navigate these challenges through more, responsible monetary policy and some, structural reforms.
Okay, so no clear consensus then, no magic bullet.
Not yet, but,
Yeah.
that doesn't mean we're powerless.
Yeah.
Even if we can't single-handedly, change the whole system,
Yeah.
we can control how we respond to it.
Right.
We can educate ourselves, we can adapt our financial strategies and make choices that empower us to thrive, even when things feel uncertain.
Yeah, I like that perspective a lot, focusing on what we can control,
Mm.
even when, the world feels chaotic.
Right.
Knowledge is power, right?
Absolutely. And that knowledge really does equip us to navigate even the most complex economic situations.
This has been a really great deep dive, honestly. I feel like we've gone from kind of feeling anxious and overwhelmed by inflation to really understanding its root causes
Mm.
and even exploring, some practical ways to kind of get ahead of it. And the article really emphasizes, this idea of moving away from a passive approach to our finances
Yeah.
and becoming much more active.
It's not enough to just save and hope for the best anymore.
Right.
We have to be more strategic. We have to be more informed about where we're putting our money.
So instead of blindly following, outdated advice
Right.
or just following the crowd, we need to become like our own financial advocates.
Precisely. It's about, really owning your financial future and making
Yeah.
choices
Yeah.
that are aligned with, your goals,
Yeah.
your risk tolerance.
Mm-hmm.
And whether that's, exploring alternative investments like we talked about, real estate, commodities, or even, if you're up for it, diving into high-performing equities,
Right.
Researching individual stocks. The first step is really, educating yourself and maybe, reaching out to some experts.
Yeah, and I think it's important to remember, as you were saying earlier, you don't have to become an expert overnight, right?
Right.
It's just about taking those first steps
Mhm.
towards greater financial literacy and gradually, adjusting your your strategy over time.
Every journey starts with a single step.
Yeah.
And the journey toward financial security, especially in an inflationary world, is no different.
Well said. So as we wrap up this deep dive here, I want to leave our listeners with this question. If you could take just one action today to better protect your financial future based on what we talked about, what would it be? Would you, research a new investment strategy? Would you call up a financial advisor? Or would you maybe just even have a conversation with your family about, your financial goals and your concerns? The answer is entirely up to you.
Yeah.
But the important thing is to start taking action. Don't let inflation just paralyze you. Empower yourself with knowledge and take control of your financial destiny.
And remember, even in a world of, economic uncertainty, informed and proactive individuals can not only survive, but thrive.
Couldn't have said it better myself. Thanks for joining us for this deep dive into inflation. Until next time, stay curious, stay informed, and stay empowered.